Well, greetings, my beloved clients and friends. I want to talk to you today about a core element of our investment strategy or investment philosophy here at Platinum Wealth Management. And that is, we're basically a buy and hold type of company. That's our goal, is to find great companies that we could hold for a long time and that could compound. Okay. And that strategy is it's cost efficient, it's tax efficient, and it's also not very popular on Wall Street because it's cost efficient, because it doesn't generate a lot of trading, which is how Wall Street makes their money. And so, the system is not designed to facilitate a buy and hold strategy. The news cycle is designed to provoke trading and seeing opportunities and fears and reasons to buy and reasons to sell on a daily basis. And so, to a certain degree, we have to immune ourselves or isolate ourselves or protect ourselves from that cycle, because it's we have to fight it, to put it simply, because it does come into our office and influence if we're not careful. And we definitely want to pay attention to this stuff, but we don't want to give it too much of a voice that it takes us away from our strategy of looking for great companies. And the thing we like about these great companies is, they could compound for a long time. It could be a good investment for decades and just continue to compound. And it's kind of I believe it's a lower risk way to invest. Obviously, from a day-to-day basis, they're going to have some volatility, but it's kind of like a real estate investor's mindset for investing in stocks. Real estate investors are usually in for the long game. They're the most successful ones are thinking 20 and 30 years out, and their hold periods are typically longer. And people kind of feel like, well, real estate seems to be more safe. It's because of the approach, to a large degree. When the stock market, with the ability to see the prices on a daily basis, it appears to be more volatile. But if you could see the prices on a daily basis in real estate, I would imagine, have the same kind of volatility. But so how and I think this approach is timely, because I believe we're in the middle of a mega cycle of massive change, where a few companies could be winners and beneficiaries over a long period of time. And that mega cycle we're talking about is the advent of AI. And so how do we formulate a methodology for this? And one thing we do is try to look at past companies that have met that criterion, that have been decades long winners, and put our hands on them and feel them and know what they feel like, and compare different ones in different industries, and see if we could identify some commonalities and some traits of these companies that ended up being great investments for decades. And let me give you a few examples. Like General Electric was a company. It was one of Thomas Edison's two main companies. One was General Electric and one was Consolidated Edison. And so with Consolidated Edison, he generated the electricity and put a plug in every room of everybody's house, right? And then with General Electric, he sold them appliances that you could plug into those sockets that he put in every house. And it changed the way people fundamentally lived. And it was a good investment for probably 50 years. And all you had to do was buy it and hold it. And imagine this 50-year investment, and 10 years in, this thing's ripping, and it's like, people that had invested in those prior 10 years were patting on themselves on the back and enjoying the fruits of that. But it wasn't too late. It wasn't too late. Oh, I missed it. No, you didn't. You could have invested that and had a 40-year run. 20 years into it, it wasn't too late. You could have invested and had a 30-year run with this company. Okay, and that's one of the lies Wall Street tries to tell. And like I remember in the 80s, Microsoft, which is another one of these companies that has been a good 40-year investment. And Bill Gates was in his 30s, and he was one of the richest men in the world, and he was on the cover of magazines, and he was the embodiment of the Revenge of the Nerds. And people had made a lot of money investing in Microsoft early on, and there was ads or articles and stuff, the next Microsoft. And this was as early as the late 80s and early 90s. And like, what do you mean the next Microsoft? Guess what's the next Microsoft? Microsoft. Microsoft it's still a good investment 40 years later, So, and you get and it's had periods of lulls, and it's had down days and down months and down quarters and down years. But, it's been an incredible compounder. It's the number one or two largest companies in the world still, and it's been able to get to the top and stay in the top for decades. And, that company is a type of company that we would like to buy and hold. And maybe every day it's not the big winner of the market, but so what? It's this compounder that over decades has given you mid double-digit returns. So GE was kind of a similar company, and you think about the transformational change it made to, there was appliance stores and appliance departments in stores, and where they sold GE stuff, like anything you could plug in, anything you could think of, a fan, a blender, a toaster oven, a washing machine, a dishwasher, a hair curling iron, an iron to iron your clothes, right? All these things had GE on, a TV, a stereo, right? Anything that you could plug in. And these were things that the prior generation didn't have, right? If they wanted to iron something, they'd have to heat that iron over the stove. And now there was a generation that just plugged it in. If they wanted to toast bread, they had this little wire thing that you'd put over the stove, and now they could just pop it into a toaster. If they wanted to make a cake, the beater had a little handle like this that you would turn, right? And that's how the batter got beaten. Now you just plug it in, right? It changed the way we live, okay? And it was a good investment for decades. Like AT&T as well, Ma Bell, and the breaking up of AT&T was a good investment for decades, because it fundamentally transformed the way we communicate as human beings. And Ford was a transformational company. Prior to Ford, there weren't gas stations, and there weren't mechanics and body shops and freeways and motels. That automobile transformed the way we live, and how far we could be from work, and how quickly we could go from one place to another, and how stuff gets transported, and those were companies that were good for decades. And now, we've experienced other revolutions in my lifetime, like the computer. IBM was another one of those companies that was a great investment for decades. International Business Machines, they made the hardware of the computer revolution. And Intel Inside, and for decades a company like that was a great investment. And companies like that are transformative, and now in more recent times, you could think of companies like Apple. And Apple fundamentally transformed the way humanity operates with that smartphone. And phone is really a misnomer because it's not just a phone, it's a camera, it's a phone book, it's a TV, it's a computer. It's really a computer in your hands. With that computer, you have access to, you know, so it fundamentally transformed the way people exist, and it's actually having an impact on the way the human body, the younger generation, their neck is a little bit different and their hands are a little bit different because of this thing. It's crazy the impact that one company has had on the world. And you look at, every corner of the world, and there's people on their phone. And that's happened in such a short period of time. And Apple has been a good investment for decades. And one of the other things that these companies tend to do, because they're so transformative and that transformation is so profitable, that they become these cash generators. And then with that cash, they get into other things. And GE is the perfect example, right? They were the appliances. I remember that commercial, GE, we bring good things to life. And over time, these appliances were so profitable and so ubiquitous that what did they do with that profitability? They got into other endeavors: aerospace, insurance, finance, and they had largely become a finance company by 2008, and that's kind of what took them out, that global financial crisis. But prior to that, it had been a great investment for decades. Okay, one of the most valuable companies in the world. I think at one time it was the most valuable company in the world. Okay, and it's not something that you needed to trade in and out of. You could have just bought it and held it for decades. And like I said, even if you were 20 years late, you still had a good 20-year run in it, So, that's something that we have to resist, that nature to say, a month ago, it's gone up 10%, and last month we missed it. We got to resist that thinking in the office, and just because it's up 10 or 20%, it doesn't mean we missed it. If it's one of these type of transformational companies, if it took us, a few months longer than someone else with a little bit more foresight to figure it out, we could still have a nice 10, 20, 30-year run. Okay, so, and the other thing about these companies that have had these runs for decades, they weren't dependent on interest rates being low or high, or the economy expanding or contracting, or a Democrat or a Republican, or peace or war. These are companies that flourished throughout all those types of scenarios, that experienced, the good and the bad. And through that, these companies persevered and stayed on top and continued to expand because they were bigger than that. They transformed humanity beyond, interest rate movements and beyond, political ideologies. Okay, so that's what we like about those companies. And so one company that I believe is poised to be that type of company, a good investment for decades, is Tesla. And Tesla started out as a car company. I believe that Elon Musk is the Thomas Edison of his generation. And it's funny because he's in the same field, electricity and applied electricity. And, Tesla could bring energy to your house the way Consolidated Edison did with, solar panels and power walls, and then give you the thing that you plug into it, which right now is a car, but could also be heating and air conditioning. And as they here's the crazy thing about Tesla. When you buy a Tesla, you have access to Tesla's charging network, and it's the most robust network in America. And they've recently opened that up to other brands so that they could also charge. So it's like it's the auto company and the gas station. It's like Ford and Exxon rolled up in one. Think about that, how they're expanding beyond just making cars. And and I think they've kind of plateaued in their car making. They've they've gotten up to 2 million cars a year, and which is about on par with BMW. And but it's a far cry from, say, Toyota. And I don't know, as a car company they could catch up to Toyota, who makes 9 million cars a year. Tesla makes about 2 million, about the same as BMW. Because if you think about it, they only really make two cars, the Model 3 and the Model Y. You know, they also have the Model S and the X and the Cybertruck, but those sales are just incremental. They're not really meaningful. So they basically have two vehicles, and you compare that to Toyota, who has compact cars all the way to luxury cars, sub $15,000 cars to 100 plus cars. They have cars, trucks, SUVs, vans, industrial vehicles, right? Sports cars, luxury cars, coupes, sedans, two-wheel drive, four-wheel drive, gas, electric, hybrid. I think maybe even hydrogen. So, and they have a global network where you could buy them, service them, and get parts for them, and get the fuel for them. Which Tesla can't say that. They're not everywhere in the world. Their service network, their parts network, and even the fueling of these things is not global. So will they ever be produce 9 million cars a year? Maybe not. But they're expanding into other things, and that's what makes that company still compelling. And they've been working on this autonomy to where that vehicle could drive by itself, and they seem to be getting closer and closer. And the world seems to have an appetite for it. There are areas in the United States where self-driving cars operate. In China, that's even bigger. So Tesla's on the cusp of getting into that market. And what is a self-driving car? Basically, it's a robot on wheels. And when they master that ability to have that vehicle operate autonomously just by taking inputs from what's in its environment, they could easily turn that into a machine, not with wheels but with legs, and it would be cheaper. It's cheaper to make a robot than a car. It's smaller and cheaper. So imagine you could have something in your car in your house that did all the things you wanted it to do. Kind of the next step from Edison, where you had to, some mechanical way of cutting bread and beating eggs and toasting bread and stuff like that, to now there's an electronic way to do it. And then the next iteration is there's a robot that'll do it. Think about that, right? And for $10,000-$15,000, a lot of people could afford that. Have one in their house that folds the clothes and prepares the meals and waters the plants and feeds the kids and stuff, whatever. And Tesla's at the forefront of that. They, like I talked about, the energy side, they are, now that they have cars and they know what they're doing, they know who's a good driver and who's a bad driver, and they could use that for insurance purposes to underwrite insurance to those people. They could bring financing in-house. That's what GE did, and they could have a financial arm of their company. And there are other things that Elon is doing that are not under the Tesla umbrella, kind of like Edison, where his power generation was not under the GE umbrella, but I believe, in the next years and decades, Tesla will kind of resemble GE with, appliances. GE has had appliances, aerospace, finance, insurance, and different branches, and Tesla would have like vehicles, robots, power generation, power storage, insurance, finance, and I'm sure other things that he's working on that will be under that Tesla umbrella, and it'll be this global conglomerate, and could potentially be a good investment for decades. So that's just an example of the type of companies that we would like to have, and what we're looking for, and why maybe we don't pay as much attention as other people do on interest rates and political cycles and the economy. We do. I mean, we talk about it and we like to think about it, but we don't want that to take over the conversation, because great companies have one unique characteristic, that they're great in all those environments, and so that's one thing we like about them, especially for the type of investing we do. We do long-term investing for people. Often we're managing their money for the rest of their life, and then they're going to pass it on to their kids. And we have several clients, so we have 3 generations that we're managing their wealth for them. So it tends to suit those type of investors, and it's tax efficient and it's cost efficient. We're able to deliver that type of service on a pretty low cost without having to have a huge infrastructure of a bunch of traders behind us, because we're not doing that, So hope that helps, gives you some insight into our strategy. And more than anything, I was probably talking to myself to remind myself, and I have to have this conversation with myself and my staff at least a couple times a year, to remind ourselves just to stay planted and stay focused on what our strength is and what our strategy is, and not get distracted by the day-to-day news cycle. Okay, so I hope you guys have a great day, and hope this helps give you some insight into what we're thinking about and what we're doing, and why we own the companies we own, and what is our approach to managing your money. All right, so have a great day.